If you're holding Bitcoin, you need to listen up. What just happened in the last 24 hours could trigger the biggest market crash since 2022, and it all comes down to one critical number that has just been completely shattered.
All right, let's get right into it. The $80,000 line for Bitcoin is gone. This wasn't just some line on a chart. It was a massive psychological wall for the market, and we've just watched it completely collapse. And this is where we're at right now. A brutal drop that has the entire market on high alert and has everyone asking the exact same question. How much lower can this thing go?
I mean, just look at how fast this happened. We plunged from the mid-80,000s, a drop of over 7% in a single day. So here's what we're going to do. We are going to break down the scale of this damage, expose the powerful catalyst that caused it, and then lay out the critical options you need to consider right now. For anyone who bought in at $90,000 or maybe even higher, this is a seriously painful moment. You're watching your portfolio get hammered, and that support level you were counting on has just vanished. This is a major, major test of conviction for everyone.
And make no mistake, this isn't just about Bitcoin's price. What we just witnessed was a market-wide liquidation event, a tidal wave of forced selling that has caused absolute carnage right across the board.
Get this. In just the last 24 hours, $1.7 billion in leverage positions have been wiped out, just gone. These were traders using borrowed money to bet on higher prices, and they got caught in a nasty cascade of margin calls that just made the crash even worse.
And this isn't just some abstract number. That figure represents nearly 270,000 individual traders who were forced out of their positions. Their accounts were liquidated, and that's what turns a simple downturn into a terrifying freefall.
And as you can see, the contagion is spreading fast. The pain is literally everywhere. Ethereum, Solana, XRP, Cardano, all posting these brutal double-digit losses. This isn't just a Bitcoin problem anymore. It's a massive flight from all risk assets in the crypto space.
And if you want to know how the market feels right now, this says it all. The Crypto Fear and Greed Index has absolutely plummeted to 15. That is deep, deep in extreme fear territory. This signals widespread panic and capitulation, a level of pessimism we haven't seen in months.
So the big question is why? Why did this happen now? Well, this wasn't some random event. The market didn't just collapse on its own. It was a perfect storm of powerful macro and market-specific factors that all hit at once to break that $80,000 support.
We're looking at a perfect storm with four key drivers. First, a shocking nomination for the next Federal Reserve chair just rattled the markets. Second, we saw massive outflows from Bitcoin ETFs. Third, miners have been selling heavily. And finally, the over-leveraged market was basically a ticking time bomb that just exploded.
The biggest shock by far was the news that President Trump is nominating Kevin Warsh as the next Fed chair. Now, Warsh is known as a monetary hawk, and markets are panicking because this signals the potential for higher interest rates and less cheap money, an environment that is historically toxic for assets like Bitcoin.
And to really put this into perspective, you have to understand how this crash is fundamentally different from the 2022 bear market. That crash was caused by internal crypto failures, FTX and Luna blowing up. Today's crash is being driven by external macroeconomic fears about the future of global monetary policy.
And this expert quote from Paul Howard really just hits the nail on the head. The market was simply too bullish, too greedy, too leveraged. When that Fed news hit, it triggered a violent, but you could argue necessary, reset that washed out all of that excessive risk.
So that brings us to the most important question of all. What happens now? The damage is done, the market is terrified. We need to look at the key levels to watch and the strategic choices that are now on the table.
Okay, there are three lines in the sand that we have to watch. $75,000 is the next immediate battleground. If that fails, $70,000 is the next major psychological floor. And the ultimate bear target, according to a lot of veteran traders, is down at $66,000.
But this right here might be the most critical number on the chart right now. $76,037. Why so specific? Because that is Michael Saylor's average purchase price for all of MicroStrategy's Bitcoin. If the price breaks below this, one of Bitcoin's biggest bulls will officially be underwater, which could trigger a whole new wave of panic selling.
Right now, expert opinion is sharply divided. The bears are definitely in control, with over half of them predicting a drop below $70,000. But you've got this small contingent of bulls who believe this was just a leverage flushout and we could see a quick retest of $90,000. Right now, uncertainty is the only certainty.
So ultimately, this leaves you with three primary choices. Number 1, sell. You cut your losses, protect your capital, and wait for all this dust to settle. 2, you hold. If your long-term conviction hasn't changed, you just ride out the volatility. Or 3, you buy the dip, viewing this extreme fear as a potential accumulation opportunity.
There is no single right answer here, and the next few days will be absolutely critical for the direction of the crypto market for the rest of the year. So the real question is, how will you navigate this chaos?